Hey guys, Sal Bossio with Mortgage Universe, where real deals get done. I wanted to talk about how you can track the interest rates yourself. Yes, you can Google these things too, but it's kind of nice when you can actually look at interest rates in real time. And we do that by basically looking at the US 10-year Treasury. So I want to show you how you can view the US 10-year Treasury in real time. Interest rates tend to track the 10-year Treasury closely. So I wanted to show you, you can download an app called TradingView. TradingView, you can get on your phone. You could go to tradingview.com on your computer, and you can really just basically, once the app is downloaded, you can search up here and type in US 10-year or US 10Y for US 10-year Treasury. And this will basically show you, you can go all the way back to to the 1930s of, mortgage rates. And actually I posted something that basically showed the 5% range was basically like a magnet for interest rates, which is basically where we're heading now, for a conventional loan. But anyway, I wanted to zoom in a little bit to like this year / last year, the last couple years of rates, mostly about where we're heading now. So if you look at, you can download the app, you can keep track yourself. I even made something where you can, I'll provide the link on this post where you can see what my prediction is and just click this play button and it'll basically show you where I think we're heading, which is basically this little circle here. I think we're going to hit this support where we saw back in September of 24. Now it's, September of 25. And I think we're basically going to end up right back to where we were in that, conventional 5% range, which would be really nice. It's a very fair, even place for interest rates. It's like a magnet over the last 100 years, essentially. But anyway, so US 10-year US 10Y is how you search this field. There's how you search this chart. And basically, I want to show you that, I think in the next few days, Jerome Powell is going to be talking about interest rates, and he's going to probably announce a cut, right? A 0.25% cut or whatever. I kind of ignore all that noise. I get a lot of emails from borrowers that say, yeah, rates are going to fall soon. I'm like, they've actually been falling. You got to understand that the interest rates are sometimes priced into the news, right? So right now, interest rates are actually falling in anticipation that Jerome Powell is going to announce a 0.25% rate cut, right? It's not an immediate thing. It's not like he's going to announce it and then next day, boom, all interest rates drop a 0.25%. It's just not the way it works. It could be a gradual thing over time. I've been saying this even before any news about what the Fed's doing, what Jerome Powell is going to announce, whatever. If you look at the chart, which is kind of how I look at the stocks and cryptocurrencies and bonds, and that's basically what this is. Right now, we just smashed through a support at 4.18 on the US 10-year Treasury. So if you look at these little supports that I had previously marked with a little yellow underlining there, if we zoom in a little bit here, every single candle here, if you see the red and green candles, the red candles represent when we go down, the green candles represent when we go up. Every single candle is a day. So right now we're in this candle right here, this candle, okay? So this was today, this was yesterday, this was the day before, this was the day before that, and so on. Okay, so notice the last 4 days we've been seeing decreasing rates, anticipating this announcement of a 0.25% cut. Now, last time this happened in April of this year, where was that? That was right around here. Everyone thought, rates were falling. Look at these candles, down, 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 down. That's 5 days in a row of candle being down, of interest rates being down. And then Jerome had his meeting right here. And look what happened. Boom. We shot up. And then this is over the course of basically a month, right? Interest rates shot up for a straight month before they started to even out again. So there's a possibility that that can happen again, right? So rates are looking pretty good right now. When this meeting is, I forget exactly the day that it is. I should probably know that, but I kind of, doesn't matter to me because I look at the chart. The chart kind of says it all. Right now, we have a support at this April of 2025 area that I think that's the first level of support, which I think we're heading to, and we're on our way there. But then most importantly, we have this level of support from September 24 from a year ago, which I think we're going to see by the September 17th to September 22nd area. I think that we're going to continue to see these drop. And I believe Jerome speaks at some time in between now and then. So I do think that this is going to be an excellent time to lock in an interest rate if you're looking at buying a home, refinancing, anything mortgage related, I think would be an excellent time to make some type of move, only because I think it's going to be pretty short-lived, because I do believe that really what we're going to see is something like this. We're going to see a decrease, right, by the end of September 20th area, and then I think we're going to slowly come back up, and I think we're going to be sideways for a while. And if you zoom out, I have this little fractal that shows an estimate of what's bound to happen. And I think that at this very low area here, this is around August of 2027. So I think that that's right around the end of Trump's term where we're going to see the lowest rates that we will have seen in a while. That's pretty much, that's years from now. So it's kind of irrelevant to what I'm talking about right now. But generally, the purpose of putting this video out is to manage expectations on, people that think he's going to announce 0.25% reduction and the rates are just going to fall overnight. Because, that could happen. It might happen. If we look at the chart, this time, it might be a little bit different than the last few times. I'm not saying it will be, but last two times we announced a rate cut, the mortgage rate shot up for the next few months. This time it might be different. I actually do think that they're going to continue to fall this time because of the way the chart looks. If you look at, again, the fact that we just smashed through a previous support that had bounced 1, 2, 3, 4, 5 times. Now we've smashed through that support. So what I mean is, I'm going to try to show you here. Support, this is basically the support. Let me make this color, let me make this a little brighter. This was the previous support. Notice how each time we bounced from this area. So from December of 24, up, down, March 25, up, and then we kind of smashed through it, but it was bought back up pretty quickly. Again, support, May 25th, again, June of 25, May of 25, June of 25, and then August of 25, we bounced again, but it's getting less and less, we're seeing less and less excitement because our highs are getting lower each time. Higher high, then a lower high, another lower high, and now, finally, we saw this area, and we just completely smashed through that support. So there's not a lot of resistance on the way down here. There's not a lot of movement, or as far as interest rates go, it was very volatile from September of 24 up to November of 24. So there wasn't a lot of sideways action like we saw this year, like this little chunk of stuff right here. So I do believe that there's not going to be a lot of resistance. So I think our first stop is basically, what did I do there? Our first stop is basically matching support here. And then I think we might see a tiny little bump, and then we're going to see another little drop. Again, I believe it's going to be around September 17th to September 22nd, or maybe maybe it'll take a little longer. Maybe it'll do something like this and not a straight drop. I don't know. But all I know is that I do think the rates are going to keep heading down, and it's going to be a fantastic time to really start thinking about what you want to do with your current mortgage, or if you're looking to purchase investment properties or whatever it might be. But anyway, that's the video for today. If you liked everything you heard, feel free to press the like button. That would really help me out a lot. Click the subscribe button if you want to see more. That would help me reach more people, so I'd appreciate that. But other than that, have a great rest of your day.